Fundamental analysis is a method used to assess the intrinsic value of an asset, typically stocks, by examining both quantitative and qualitative factors about a company, its industry, and broader economic conditions. The goal is to determine whether an asset is overvalued, undervalued, or fairly valued by the market, thus guiding investment decisions. Unlike technical analysis, which relies on price movements and patterns, fundamental analysis attempts to estimate the true worth by focusing on underlying business performance and macroeconomic variables. Core principles and layers. Fundamental analysis operates through several key principles and layers, often taking a top down, starting with the economy, then industry, then company, or bottom up, starting with the company itself approach. Economic analysis. Review macroeconomic indicators such as GDP, inflation, interest rates, and unemployment, which influence the general market climate. Industry analysis. Assess the industry's prospects, sector trends, competitors, and regulatory environment. Company analysis, deep dive into the company's financial health, management quality, market position, business model, and growth potential. Key tools and metrics. Fundamental analysts use a variety of tools such as financial statements, income statement, balance sheet, and cash flow statement are core documents. Ratios and metrics. Crucial ratios include price to earnings, PE, price to book, PB, earnings per share, EPS, return on equity, ROE, debt to equity, dividend yield, and compound annual growth rate, CAGR. Valuation methods, comparing financial metrics to industry peers, discounted cash flow, DCF, book value, and liquidation value help determine intrinsic value. Types of fundamental analysis. There are two broad types. Quantitative analysis focuses on measurable numeric indicators like earnings, assets, debts, and statistical ratios. Qualitative analysis involves non-quantifiable elements such as brand reputation, quality of management, public opinion, and corporate governance. Blending both provides a more holistic view. Objective statistics are weighed alongside subjective business qualities. Application of fundamental analysis. Investors utilize fundamental analysis primarily for stock selection, identify undervalued or overvalued investment opportunities. Long-term investment, forecast a company's sustainable growth and profitability. Risk assessment, gauge a company's ability to manage debt and face economic challenges. Key financial statements in fundamental analysis. Fundamental analysis of a company involves a close examination of its three core financial statements. Each provides distinct but complementary insights into a company's financial health and prospects. Income statement. Purpose tracks revenue, expenses, and profits over a set period, usually a quarter or year. Key revenue, sales, cost of goods sold, gross profit, operating expenses, net income. What you analyze, profitability, expense control, earnings growth trends. Provides ratios like gross margin, operating margin, net profit margin, and earnings per share, EPS. Balance sheet. Purpose presents a snapshot of a company's assets, liabilities, and shareholder equity at a specific moment in time. Key current and non-current assets, cash, inventory, receivables, property, current and long-term liabilities, debts, obligations, shareholders' equity. What you analyze, liquidity, solvency, net worth, capital structure, and financial stability. Useful ratios derived current ratio, quick ratio, debt to equity ratio, asset turnover, equity ratio. Cash flow statement. Purpose details cash inflows and outflows from operating, investing, and financing activities. Key cash from operations, core business, investments, buying, selling assets, and financing, loans, dividend payouts. What you analyze, quality of earnings, financial flexibility, cash generation capacity, sustainability of profits. Investors focus on operating cash flow and free cash flow for a clearer picture of the company's ability to fund growth, repay debt, and pay dividends. Why these statements matter. Together, these financial statements allow investors to calculate and interpret vital ratios, e.g., PE, ROE, debt to equity, spot trends, assess risks, and compare companies within industries. They form the foundation for understanding a company's financial strength, efficiency, profitability, and intrinsic value, key elements in making investment decisions. Fundamental versus technical analysis. Fundamental analysis seeks to determine intrinsic value using company and economic data. Technical analysis focuses on price charts and trading volume to predict short-term price movements, more suited for traders than long-term investors. Examples of fundamental analysis tools. EPS, earnings per share, indicates profitability per share. PE ratio shows how much investors pay per dollar of earnings. ROE, return on equity, measures profitability relative to shareholders' equity. DCF, discounted cash flow, calculates present value of expected future cash flows. Summary. Fundamental analysis is essential for investors aiming to understand a company's real value beyond the current market price. By examining both quantitative data, financial reports, ratios, and qualitative factors, brand management, fundamental analysis helps in making informed long term investment decisions, assessing risks, and comparing with industry peers. Key takeaway: fundamental analysis is the backbone of value investing and long term investment strategies, focusing on the financial health and intrinsic factors influencing asset values.